So let's parse this old dirty dozen worth of companies that I would have shorted the heck out of.
The House of Pain.
At my old hedge fund, whenever I saw the same kind of action that the Fed was enduring, the yield curve, and how a Fed chief talked about raising interest rates even more aggressively to cool inflation. Why don't we start with two old Cleveland-based metal benders, Eaton and Parker Hannifin. I always used to bet against Eaton going into recession because it made a bunch of connectors and gauges and valves and a lot. Their old business would get killed right about now, and you would expect Eaton, the stock, to look like this. Not the way it is now, where it's just been sloping up and not tumbling down. The reason? All you got to do is go to the website to see what changed. The Eaton of today is all about sustainable power, managing that power, and vehicle electrification, and building efficient vehicles that travel faster and farther and higher. How about Parker Hannifin? Now you're talking about hydraulic power, something you know we need a lot less of going into recession, right? But go to the website, and what you find is these days, Parker Hannifin's all about clean energy for a sustainable future, and the world's smallest all-electric tractor. They're the nuts and bolts, not of some dirty old engine, but wind turbines and solar panels. They help you comply with environmental regulations. 3, Ingersoll Rand, textbook cyclical. I know it is a maker of dirty roadside engines. You've seen them too. Yet the new Ingersoll Rand is all about reducing your company's carbon footprint. They increase industrial productivity, precisely what you need if you're a manufacturer worried about a recession. 4, Cummins. Oh, come on. This is a dirty old truck engine maker, right? No. It's now dedicated to zero emissions and electric vehicle charging. Never thought these guys would come out against typical internal combustion engines. But this very morning, Jennifer Rumsey on Squawk on the Street, the new CEO, revealed her zero carbon engine initiative, and it's believable and it will be profitable. Wow, Cummins. Next, I thought for a moment Caterpillar's website, right? Caterpillar's with us, right? Caterpillar's website has to be talking about the companies being the leader in earth-moving equipment. No. Cat's urging you to go inside the mind of a Caterpillar data scientist. The darn company's become a data whisperer with a thinking machine attitude. The data talks, Cat translates. I knew Dover once as some company that made a bunch of things out of little valves and gauges and stuff and specialized in elevators. No, totally wrong. Dover exited elevators 25 years ago. The new Dover is now about clean energy and digital solutions for fueling. Who would have thought it? Here's two companies this knucklehead knew as air conditioning plays with some vents and heaters and boilers. Carrier and Trane. I couldn't have been more wrong. They're companies that get you to be able to meet the next generation's difficult environmental regulations. They are, in a way, the most important linchpin in the fight against global warming, because heating and air conditioning can be such huge greenhouse gas generators. When it comes to pollution, the old HVAC systems rival the old engines made by Caterpillar, Cummins, and PACCAR. PACCAR! There's another one. I go to PACCAR's website, and what's the lead? Well, battery-powered trucks. Nobody wants to be known as anything they used to excel at. Hey, same goes for Johnson Controls. This is another HVAC company that's now anything but HVAC. According to Johnson Controls, they're, quote, powerful, impactful, sustainability, respectful, safety, and security, end quote. Nothing more paramount than sustainability, and safety never takes a vacation, nor does the creation of safety regulations. Talk about a secular growth story. Can we count on United Rentals to at least be cyclical? These guys rent out equipment for pretty much every industrial construction application. You can imagine that stuff collapses in a recession. No. The website says United Rentals is your partner for a safe, productive, and sustainable worksite. Again, there's never an effort to lessen safety rules, is there? Not even in China. Productive? Well, that means anti-waste. Sustainable? It means ESG-oriented money managers can get away with buying the stock. Next, there's Rockwell Automation, pure play automation of factories. Sure, but also a, quote, global leader in digital transformation, end quote. I never would have known if I hadn't checked. The clean dozen? Is it a giant canard? Is it just a way to get the ESG crowd to bite? Actually, no, it isn't. I think there are many parts of these businesses that indeed look like the old smokestack companies from my generation, but for the most part, the transformation is real, and more important for you, Mad Money viewers, very profitable. These companies figure out how to take control of their own destiny rather than bounce around the mercy of the slings and arrows of the Fed or the yield curve or anything else that's macro that we always talk about on air. They decide that the world's headed for decarbonization, and who the heck knows more about how to decarbonize than the one-time biggest enablers of pollution out there? Here's the bottom line. On Wall Street, what matters are the numbers. And there's so much work for those companies that help eliminate the waste, be sustainable, make things safer, less zero carbon, digitized, that these stocks are buys, not sells, even in a slowing economy. I never would have seen this coming, but saving the planet's become a much more reliable business than despoiling it, and a lot more lucrative, too.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.